Okay, for this video, I wanted to walk through IRS Form 8959, the Additional Medicare Tax, and some simple computations for the two most common occurrences we see, where Part 1, if you have Additional Medicare Tax on wages, so W-2 compensation from your employers, or it might apply to you in Part 2, Additional Medicare Tax on self-employment income. Now, there is a third part, Additional Medicare Tax on Railroad Retirement Act compensation, but frankly, don't see this too often, and just for purposes of this video, I wanted to stick with what I see most common in practice is definitely the Additional Medicare Tax imposed in one of these two sections. Okay, so I've got the form in front of us here in a slide with the fact patterns that we're going to look at, and then we'll jump back to the 8959. So the 8959 is used to report an additional 0.9% Medicare tax on earned compensation. So that's W-2 wages or self-employment income via Schedule C, or maybe you're a partner in a partnership and you got a K-1 with a from the 1065 that has line 1 ordinary income that might be subject to self-employment income. So a couple of options there. So Part 1 is the Additional Medicare Tax on the wages. So if you have wages that exceed certain filing thresholds during the year, you might be required to not only attach this form but pay that additional Medicare tax. So on the form, they do have the filing statuses there listed for line 5. So if you're a single filer, this is our example. Single filers with $200,000 or more in compensation are going to be subject to this additional Medicare tax. Married filing joint is $250. Married filing separately is $125. Okay, so our example here, we have John. He's a single filing taxpayer, and he had 2 jobs during the year. His first job, W-2, shows income of $190, and the second W-2 job, income of $50. So total Medicare wages are $240,000. Now, the reason why we highlight that they're separate here is because employers are required to withhold that additional tax on wages if they exceed $200,000 for the single filers. But in this case, you see here with the $190 and then the $50, neither employer paid John more than $200,000, so neither employer had to withhold the additional tax. It's John's responsibility for reporting these totals in compensation and computing and paying the tax on his return, right? So the responsibility falls to John now. So what does John do? Well, he reports the total amount of what Medicare wages, right? So $240,000. His filing threshold is $200,000, so he's got an additional $40,000 of compensation, W-2 compensation, that's subject to this Medicare tax. So multiply line 6 by 0.9%, and you get $360 in additional Medicare tax on those W-2 wages. Okay, so John owes that extra $360. Now let's look at Part 2. Part 2 is the additional Medicare tax on self-employment income. Okay, so this also applies. If you've got self-employment income in excess of those, and in total, so when you add your self-employment income to your W-2 income, if you got some of that, if your total still goes beyond that $200,000 threshold for a single filer, you've got this 0.9% surtax, the Medicare additional tax. Okay, so let's say John's W-2 wages. He also runs a consulting business on the side. So he has his income and expenses report on Schedule C. The Schedule C net income is going to be included in Part 2 of Form 8959. So let's look at his Schedule C, right? He's got profits of $89K, but the amount that's being reported on the 8959 is a reduced amount, $82,192. I'm going to show you where we get that number. So if we look at Part 2 here, the self-employment income from Schedule SC, $82,192. Notice how that's different from his $89,000. So if I jump down here to Schedule C, so here's his Schedule C. He's got his income, expenses. His net profit or loss is $89,000. So that's the Schedule C net self-employment income, but why are we only using the $82,192 figure? Well, Schedule SE is where you compute the amount of tax on your self-employment income. And the amount of self-employment income that is actually subject to tax is this reduced number here, 0.9235, the 92.35% figure. What they're trying to do there is they're trying to back out the amount of compensation that's being paid, the 1/2 piece, right? So we have 1/2 of the 15.3% piece of self-employment compensation that's being reversed out. So when you complete your 8959, don't use the Schedule C number. Come to your Schedule SC for your self-employment tax and use the reduced amount that's basically your self-employment number times 0.9235. Okay, so that's the number you want to be using. So let's go back to 8959. Again, we have the tax there. There's the reduced amount from Schedule SE, right? They even tell you there, Part 1, Line 6. That's what you're looking for. And here we have the filing threshold. 200K is still the filing threshold. He's already recorded 240 up here. So what this lets us know is that, yeah, you're well above the 200K amount. So the full amount of the 82,192 is going to be subject to this 0.9% also. So 82,192 times 0.9%, 740 total additional Medicare tax dollars that needs to be added to his tax return. So the 740 and the 360, add those two together, that piece is included as additional taxes owed for the year. Okay, so that's what John owes. Okay, so that covers it for the 8959. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.